What is going on, YouTube? It's Brendan for Market Makers, your host for the Sunday Kickoff Show. Your host for every show, whether you like it or not. Guys, this is where we recap the news. We look at the macro picture, the micro picture, go over TA and potential trade setups, all for your benefit to pursue financial freedom. So quick recap on the news, because many of you who are plugged in are definitely tired of hearing about Stranger Freed. Sam Bankman-Fried, previously the CEO of FTX. So what's happened? A couple videos ago, I told you I thought Sam Bankman-Fried, Stranger Freed, as a character from the Stranger Things series, Stranger Freed was going to pull a Do Kwon, which means disappear for a chunk of money, and his exchange was going to pull a Celsius or a Voyager, meaning go bankrupt. Now, back when I said that, I don't think it was a brave prediction, but back when I said that, Binance was about to consider, they sent a letter of intent, potentially buying up FTX. They since backed out. Stranger Freed stepped down. Now he has like a child. If you see her photo, she literally looks like a 12-year-old child that's running FTX. He went, disappeared. Depending what news media you follow, he either fled to Argentina the same night that they had a hack in FTX. I say hack as in parentheses, and a large sum of money between 450 million and 2 billion, depending on which report you read, went missing. Okay. But now I saw today people are saying he's in custody or, being held by Bahamian law enforcement. I don't know, guys. That's the recap of that saga where it stands. One thing I do know for sure, when you are the second largest donor to the Democrat Party, $30 million. The only person that donated more than him was George I'm Evil Soros. Okay. That's the largest donor. Bankman-Fried was the second largest donor. And that looks to me to be an insurance premium, because you would think the Justice Department is all over this. You would think this would be headlines talked about in the Justice Department, FBI, everything else. Nope. What are they talking about? Crypto regulation. What's the news media doing? They're bringing out people like, oh, my 18-year-old son had $200 in some shit coin and it's now zero because of this or because of that. And they're like, oh, see, we need regulation. I think all of us want transparency regulation, especially in the stablecoin space. But I don't know about how you guys feel, but I do not want the U.S. government coming in, labeling everything as a security, tracking everything you do. They're going to make it extremely difficult to use any type of exchange to get your money there. Everything's going to be under the purview and whichever way the wind's blowing with the U.S. government, right? I don't want that. A lot of us like the cowboy atmosphere that we have here. This is speculation on a different kind of scale. And if you can't handle the heat, get out the kitchen. What I do want is transparency. I want to know. Have a pretty good feeling about USDC because it's managed by BlackRock. Not that I like BlackRock, but BlackRock's a public company which has to report everything to the US government. So I know their funds are backed. I don't know about Tether. Do you guys know about Tether? No, because they won't allow an actual audit. Okay. They won't actually have a real audit. So nobody knows about Tether. So there's a lot of like shady things like that happen in this space, but we can work some of that stuff out. But in general, more regulation is bad, not good, in my opinion. And that's the libertarian in me speaking. Let's go ahead and jump into the charts. I'll try to keep this video under the last two, which were extraordinarily long. So let's look at Bitcoin, guys. Last time I left you this is Bitcoin on the weekly chart. I showed you a Fibonacci fan. Okay, this is my Gann fan layout. And again, if you want to learn how to do the Gann fans because you have to scale them, go to YouTube on my channel, Market Makers, type in Gann fan, you'll find the video. Like I said, I think it's the second or third most watched Gann fan video now, but you can see how to do this. So I want to show you this on a Gann fan when you start looking at levels of where you can get to, because look where we're at right now. If we zoom in, you can see we just fell below the 3-1. And you can see, we could come down and touch this, which is just about 14K. Okay, this is an ascending angle, but right around that 14K region. But I want to show you guys a couple of things in TradingView. A lot of you get education from this channel, and that's cool. And I want to just continue with that a little bit here, because there's some different features in TradingView that many of you may not be aware of. I've already showed you the line chart, right? You guys have seen the line chart. Obviously, everybody knows what a line chart is, but you can also use a line chart to see how it lays out with whatever type of fan you're laying out, right? And remember, this is the bodies, not the wicks. Now, when you look at this, if you go ahead and do this, let's look at this. Law of three wave projection going from the pandemic low up to the previous all-time high. This is using the bodies. Look at that, to the valley right here between the two peaks. Look at your 618, look at the body. That is 65,555. Now, a lot of us were in shorts at this area because of the 618, and obviously we got a wick, right? We got a wick up here all the way to about 69K in this region right in here, right? So Gann was the godfather of geometric trading, price and time, very, very proficient trader. He was actually tracked by the largest financial publication at the time, won an extraordinarily high percentage of trades, is like 90+% win ratio. But when you combine this, the geometric trading with Fibonacci, I want to show you something. Let's put this back on candles. Did you actually nail? I mean, look at this. You nailed the top with the geometric here on the Gann fan. The wick hit the Gann fan. And then on top of that, guys, you actually knew where the body was closing here. You see that? So the price itself got up to 69X, and then the body closed at 65,555, okay? So I ended up having to get back into a short down more around this area, missed this big dump, which was really frustrating. And, you can see how the Gann fan's being used as resistance, being used as support down here, and now you're falling through that next level. Well, let's go ahead and do a couple other things, because there's other things that you guys may not know about here on TradingView as far as candles and displays. Another way, I don't know when they added this, but the high-low candles, if you set this to high-low, this doesn't show you the price. This just shows you the high and low range of the candle, okay? So when you can look at this, you can zoom out in a larger time frame. And when you start looking at this, especially if you go to current trend, right? You look at the current trend, not even knowing this is a buying or, this is a red or a green bar, right? Obviously, would be a red bar. But when you look at this, does this look bullish, like a bullish setup? So when you see YouTubers saying Bitcoin 81K, Bitcoin 100K, does this look like the bias is to come down or the bias is to go up? Just different little tools you can use here on TradingView to change your perspective of how you're viewing the charts, okay? High-low charts are interesting because it can help you find patterns, trends, things like that. You may find it useful, maybe you won't. Let's do a law of three pattern. We have our geometric layout here. Let's go ahead and get some fibs here on a large time frame and see if we can find perhaps maybe a law of three, ABC type correction. If we go to the all-time high, down to that first deep swing low, back up to that peak. What do we got here, guys? Let's zoom in. If we zoom in here, we are bouncing off the 886 at 16,284. You see that? So you're just beneath the 3-1 angle on the fan, bouncing off the 16,284. Price is 16,526. So, you start looking at your biases of where price can come to. The one fib is at 12,173. This is doing it from the wicks, right? 12,173. You have a stop in here, roughly around 14K. So if you start coming down with any velocity from 16.5, you can look to be potentially bounced off the 14K, or you could fall through it, depends on the situation. But 12,173 would be where the one fib is. Now, in primary fib trading, you come down to the one fib, you get closes beneath it. If you come back and test it with that Livermore inverse cup, right, the Livermore pivot, that would be a bias for a continuation to the downside, okay? So let's go ahead and look at this. Then we'll go to the smaller time frames. If you look at this, 12,173, and let's see what else we have here that can show some of this. Let's look at, where's our 200 and 233 on the weekly? Well above us. You see that? Look at that, 233 giving us beautiful rejections here, okay? Beautiful rejection there. And let's go ahead and find our, well, let me take that off. Let's go ahead and do our ABC pattern. And we'll look at this, see what we have here. So let's go ahead and zoom out here. Do this. Here we go. All right, ABC. So here's our beginning. There's your B. And then your C is going to be potentially that one fib, right? Try to get it on it. It's hard with a rollerball mouse. There we go. All right, so that's 12,173. So your price action would look something like this, okay? So that's what you're looking at like on the weekly time frame. And then what would happen once you achieve that, guys? You would wave back up, right? But again, you could hold this. You could come down more. It depends on the market sentiment. Depends if something else blows up in the marketplace. It depends what equities do next week. If they hold, go up, or really dump hard, right? All that's going to factor in to the price action. Again, weekly time frame, I'm looking at more for forecasting. I'm not trading based on these gigantic weekly candles, right? Let's go ahead to the daily time frame. Now, you guys remember the caterpillar, because we were talking about this forever. Look at this expansion you get. Remember this whole duration that we were just going sideways? I kept saying this is the tightest contraction and volatility that we've ever had in the history of this bull run / sell-off in Bitcoin. Where did my chart go? Black hole here. Come on, trading view. There we go. All right, so look at this now. You're starting to get that expansion, and unfortunately, it is to the downside, right? Your 233 and 200 are above you. Remember, price will always, and we better hope this doesn't expand like this because you're going pretty deep if it expands like this. But price will always rise to resistance or fall to support. So what you're looking at here is, let's go ahead and turn this off, our caterpillar. The 200 and 233 aren't going to be directly contacted, it looks like, anytime in the near future, right? Now, they're going to contact it at some point, and when that happens, that's probably going to be an excellent downside trade, okay? So what you have is Bitcoin made its bearish divergence. We were talking about, I gave you guys that trade a day ahead of time with the MFI. Had a bearish divergence here, and of course, we broke down, hit our Fibonacci fan, broke down, 28% move, right? 28% move down. And now where you're at is you're trying to range here on the daily time frame. You have your 233, your 200 well above you. None of your moving averages are even close to you. If we look at these, if we just throw on a volume weight at 21, I mean, that's all the way up there at like 19.5, 19.3. So nothing's close to you. So you could reflexively come back up if the markets rally, right? But what I'm looking at here in this tighter little projection here of this Wyckoff that I have here on the daily, this is daily candles. You're seeing this already. If you're selling climax, you have your reaction. Yeah, that's your sign of weakness. You come back down, right? What you want to see is hold this 618 at 16,000. If you can hold that, get some wicks below it, maybe come back up, right? You come back up, you maybe get some up thrust here. And if you continue to roll over, man, this is so choppy drawing. If you continue to roll over, you make that double top shape, okay? That double top, just like you had, look at this. This is nothing but a disjointed double top, guys. Here's your double top right here, okay? So you got to watch these double tops. So you get that, if you get rejected up here at 17.8 and you do start falling back down, you want to be able to hold that neckline area, which is around that 16,000 here on the on Bitcoin here on this BITGET chart, okay? Because you need to follow these shapes. Now remember, you can wave back and forth, right? You can just test the bottom, test the base, test the bottom, test the base, test the bottom. You can zoom into smaller time frames. You can take trades in these smaller time frames. Lots of different things you can do. But in general, if the markets do make any moves next week, you want to watch crypto, okay? So because crypto, I'm not going to say it's on its last leg, but it's weak. But it's too early. It's too early for the true bottom. And you guys know that. So what's going to happen, looking back at the weekly, when we get to this target here potentially at the 12,000, right? You get down to that 12,000-ish target. Remember, I said 10.5 to 13.2, depending if you use the bodies or the wicks. You get down to that target, everybody on YouTube, everybody on Twitter, all these people that don't really follow TA, but now they're all on the bandwagon with, well, it's definitely going to go lower. It's definitely going to go lower. They're going to think that's the ultimate bottom. Okay. They're going to think that's the ultimate bottom. Now remember, macro cycle, where are we? We are in an upcoming global recession. The Eurozone, which when you take Europe, the whole zone of Europe, as a single economy, it's the second largest economy. The Eurozone, by mainstream media standards, is going into a severe recession / depression. The U.S. has a recession coming next year. China is either in a recession or going to a recession. That's the top 3 economies, okay? That's the top 3 economies in the world. So if everybody's going into recession, you really think this is the bottom 4,000 points down. You think that's the bottom? I don't, guys. I don't, and we have the 7-year cycle. You guys can watch my market collapse video on YouTube or the 7-year apocalypse video. Every single major market crash, the market would bottom the following year after the 7-year cycle. For us, that's 2023. If I had to guess, I would say September, October of next year, which means you're going to have wave projections up, wave projections down. But I do believe our Dow target of 3,956 will get hit some point next year. And that's the key difference of watching myself, watching a couple other people on YouTube, or watching the majority of people on the business news, or the majority of people on YouTube that only look at the upside for everything. They will think this is the bottom in crypto. And as a matter of fact, I'm not even being facetious. What's his name? Kevin O'Leary, the guy from Shark Tank. He's just on CNBC. There's video edits of him all over Twitter, all over YouTube, talking about the crypto bottom is in. He's already calling the bottom. He's calling the bottom at 16.5. He's already calling the bottom. Okay. So when it comes down here, what do you think Kevin O'Leary's going to think when it comes down to 12K? Well, that's definitely the bottom, because I thought this was the bottom. So this is definitely the bottom. It can only go up from here. Just be aware, guys, we're going to wave. We're going to go up and down, but the conditions, all the leading economic indicators, the fact that we have recessions coming in around the world, combined with 40-year high inflation, even though inflation still came down, still a 40-year high in inflation. Combined with all that, it's going to make the market conditions worsen. Q4 earnings are going to be worse than Q3. You're going to have contractions in prices, contractions in values, and markets are going to sell off. Okay, that's why the bottom is actually much lower, and you won't hear any of these people update their projections until their previous projections are defeated. But you guys get it here on my channel. So just looking at this, the way we have this laid out on the daily time frame, the 618 again at the 1658, the 764 at 13.8. This is some step down action, right? If this did just start capitulating down, the 886 at 12,088, and the 1 fib at 10.4. Okay, so those are your immediate steps down. And again, we can have this wave action back and forth, waiting for something to shift in the marketplace, or this could be relatively quick, where you come down, come up, get a sign of weakness, come back down. Again, this would take days. These are daily candles, right? And then you get that double top. You break your neckline, which is essentially that Wyckoff base, and you start going down. Or just keep waving, guys. Keep waving. And of course, if you break out to the upside, it's a possibility, especially if the markets rally hard, you could break out to the upside. Let's go ahead and look at this on the 4-hour. 4-hour, we could pull a tighter fib retracement here just from this dump candle up to that current peak, and you get a nice and tight fib retracement with fib levels here. Looking at this a little bit differently, let's go ahead and expand this. You have the 618 at 16,489. You see that? You see this being respected? So you have the 16,489. I don't want to go over all the numbers again because they're pretty similar. 786 at 1640, 886 at 15,774, and above you, you have 16,804, 17,119. So as of right now, I would say the large part of these bodies right here are trading this tighter wave, right? So in this projection, something like this, you want to hold that 618. You start losing that 618, you're going to have these candles down here, and this is when you can start really breaking down, okay? So just keep an eye on that. Now, if we look at the 4-hour, the one last thing to look at, of course, is what? Our 200 and 233. Why? Because he's given us fantastic trade setups over and over again, and they're well above us, guys. So again, if the markets, the equities markets do rally, if you get some type of counter sentiment rally in Bitcoin because it's so negative now, everything's so negative in the crypto space because of the news events that have unfolded, if you get some type of counter sentiment rally, come up to 19.5, somewhere in here, look for this to be an excellent potential area to look for a short, especially if you come up, roll over, come up, roll over again, and you end up just making a double top along your 200, 233, which you get above, and then you come back down again, okay? Just always thinking a little bit out into the future for potential trades. Let's look at Solana. So Solana, I left the fib the way it was because it's laid out so beautifully with the 1618 getting hit here at 1190, but it's following the same movements, daily time frame here. It's following the same movements as Bitcoin, right? Selling climax candle, reaction candle, sign of weakness. Now the question is, do you bounce back up? If you bounce back up, you could potentially make your double top, or you just wave. I don't necessarily see Solana bouncing up and breaking out, but if it does, then look above you, 1971, 2295. And then, of course, you have your 21-day. See how far above your moving averages are because of the dump? So I think you might take some time to settle in here, right? You might need some time to settle in, barring some big catalyst, a big rally in the equities or a big dump in equities. But you may just be testing these ranges, these small little waves up and down, up and down. These are larger time frames. Obviously, this can look a lot different on a 4-hour, 1 hour, 30-minute, okay? So let's see what the overall picture is here for indicators. Solana is in a bearish trend here on the MFI, the money flow index. And on our volume momentum, you actually have a lot of volume momentum, combination of selling, well, mostly overall selling. And you want to try to hold this area, guys. You're back down at 1389 right now. You rebound it all the way up to 1916. These are big moves, right? These are big moves. So you can definitely get some good trades in on these alts if you follow them closely and get into the right time frame on them, okay? And you can definitely do that in our room, guys. Forgot to plug our room. Check out our room. The link is in the video description. We're doing a special sale, 50% off. So for 20 bucks, using that link in the video description, you can come join our room. There's a coupon code. You can plug that in and you will get 50% off, guys. Come check out the room with 12,000 other people. I think you'll really love it. Professional staff, professional traders, great place to have fun, to be around an excellent community and get an education, live streams, trade signals, all that good stuff. And the only thing you need to do is download Discord, verify your Discord. They send you an email, pop it open, and of course, verify your account. Then come on over, guys, and try us out. I think it'll be something really rewarding that you'll enjoy the fact that you did that. So let's look at Matic. Matic's a little bit different here, guys. If you look at Matic, let's go ahead and pull this over. If you look at Matic, here's your 233s is daily. Here's your 200. A lot of you are requesting Matic. So you bounced off your 200 already, but you guys already see the shape that you're making, right? You already see you're making a double top, right? Even with my horrible drawing skills. But you can see you're making a double top. So Matic, even without using fibs or anything, you want to see if you hold that 200 at 78 cents. Your price right now is 89 cents. Let's go ahead and pull a fib on this. If we do, let's try a trend-based fib from this peak to the valley to the peak. Look at that. The 618 at 82 cents is basically where your candle bodies close here off this bounce, okay? The bounce off the 200. So you're bouncing off your spot 5 right now at 88.5 cents. If you come down to 82 cents, you want to hold that. If you lose that, you're basically breaking your neckline here of a double top that can take you further down. You would want to watch the 74 cent area, the 67 cent area, and the 61 cent area. If you get below the 61 cent area over here, then you want to look for a push down to the 1618, which is about 27.5 cents. Okay, that's what you want to watch for Matic. So you're gonna have some ping ponging in here, and if you start losing 82 cents, you lose the 200. Watch to see if it starts propelling down more, which it could easily do if we have another catalyst come into the marketplace. XRP, left the XRP layout the same way because this has been tracking beautifully. Here's your 200, here's your 233 daily time frame. You can see we wicked our 1618 at 31 cents, almost 32 cents. And you can see XRP hit that bottom, got a down thrust, got a reaction. So guys, you know what you're doing right here, right? This looks like, and again, this can change, but right now, if you're just going to press me on this, deliver more pivot, right? So let me go ahead and get rid of this fib. I want to show you this. So you have the two versions of your pivot, right? Price comes up, you roll over, you get just like this. You roll over, you try to find support, and you come back up and you want to pivot out, right? Well, you can also do this on the inverse to the downside. And it doesn't have to be outside the range. Price fell down, got rejected right at the 200, right there on the dollar, okay? Got rejected. So now you're rolling down, okay? So you want to be able to hold this area. If you just get some down thrust here, that's fine. And you roll back up again, you could come back up for a double top. Or you want to make sure you don't get this momentum where you just pivot out, because what you just did was you came back in your inverse cup. Do you see that? Your cup was a test of the 200 potentially. Now, again, you could just get some down thrusts here and price rolls back up and just waves along like it did in this grid over here. Okay, just waving up and down, waving up and down. Again, you got to see what's going on with the other assets. What's Bitcoin doing? What's the marketplace doing? You know, the equities markets are closed right now, but what's happening in the rest of the space? But definitely watch that, because this is very bearish. The fact that you fell to the bottom of your Wyckoff range, bounced back up, got rejected at the 200, rolled back down. You are making your cup pattern potentially right here, or coming back up for a retest of the 200 again, which if that fails, you made a double top. Okay, so watch that. And let's go ahead and jump over to the equities quick, because we're already 24 minutes in, and I'm trying to make these not as long as a movie. So this hasn't changed really since our last video, because the markets are closed. Now they open up at 6 p.m. Eastern time on SimpleFX. And so the Dow, guys, is at 33,742. Again, looking at the Dow, I anticipate this coming back. Every time we get outside this range, we've come back into the range. This is a weekly time frame. Let's go ahead and look at this on the daily time frame. The daily time frame, you're getting a doji candle. We'll see if this holds. If the Dow does start to pull back down, here's your 618 from your Fibonacci fan. We'll see if this holds right here at 33,791. Already got rejected back down. If we start building some type of top just outside of our Wyckoff range, end up making some type of top, maybe come down, back test this, come up, do something like that, and then come back into the range and retrace some of this, right? Now, what we do know from looking at our equities pumps, below average volume, right? So we have volume divergence building. We have a massive pump. Remember, these are 2.5-year highs on these pumps. Let's go ahead and open this up. The MFI actually had volume divergence here with the actual massive up candle, right? That one candle, the largest rally in 2.5 years since the pandemic low. So you have divergence with that, and you have negative participation. Participants actually left. This whole rally up, your volume rate of change is actually negative, okay? So you have fewer amounts of people paying higher prices, high potential to build a top. Now, you can have volume divergence for a long period of time. We had it this whole rally up. You can have it for a long period of time, but you're already on a massive move. You're at key resistance levels. You broke through key resistance levels. At a bare minimum, I'd be looking for a retrace on the daily back down to the 200, 233, which would be roughly 32.4, 32.5, okay? I think you're going to come back down and back test this, and you're either going to fail here if the economy keeps worsening, the news keeps worsening, or you can go sideways and try to get your Santa Claus rally on the way up. Now, looking at the Russell here, if you look at the Russell on the weekly, you have the 618 Fibonacci fan, and you're getting rejected right here. Here's your weekly 50. Remember the two primary indicators of switching trends from bearish to bullish, getting above the 50 weekly, upward momentum, getting above the daily 200, okay? You're still in a bear market, even if you get above this, but that is a good sign for switching momentum in the marketplace. So right now you're getting rejected at the 618. You haven't touched the 50 here on the weekly. You did pump finally back above your 200, 233, and you have the beginnings of a double bottom, right? But to get that double bottom breakout, you got to break out above here, 2015. You got to get above here and get upwards momentum and get you back in that upper tranche. I don't think you're going to have the momentum to do that in any of these marketplaces. I think most of these markets are going to be, or all of these markets are going to be coming back down at some point. And if you look at this on the Russell here on the daily, we go ahead and pull this out. Again, I laid everything out the same way, guys. So you have your 618, there's your rejection, there's your 200 on the daily, which you pumped above, got rejected, and then tomorrow is, or tonight the candle opens, and tomorrow is the higher volume in the candle. 618's at 1877, posted a trade up here to get into this quadrant. So, we got guys that got really good entries on here. We'll see if this holds up, if it starts ping-ponging in here, making some type of shape to come down like a double top. And we need more candles to tell that, obviously. But again, peak resistance, bear market rally, massive bear market rally, strongest bear market rallies in 2.5 years. So I expect this to come back down. S&P on the weekly, hitting the 618 Fibonacci fan. Your 50's well above you at 41.74. If we jump over to the daily time frame, your 200, 233, as I said, I think this could be your ceiling. Okay, if the S&P does want to keep going up, you're looking at well, almost the same exact number, 4068. Okay, so 4075, basically between 4050 and 4100 is where I'm looking at for your peak resistance area for the S&P. And you could get up there, and then I'd be looking for some type of shape to be made and for this to retrace, because I don't think the economic conditions are conducive for a further rally up after this major rally. Could be wrong, but if I thought I was wrong, I wouldn't be putting shorts on the market. So looking at the NASDAQ, guys, NASDAQ again, pumped above the 200, 233. And here's your weekly 50. Here's your 618 fan. Let's go ahead and lay this out. Do something like this. Just like that, your 618's at 12,086. The NASDAQ's been very weak because of big tech bleeding out. But, you know, this is achievable, which is only, you're at 11,803. It's only a couple hundred points. Well, I guess almost 300 points away, which, you know, the NASDAQ can do in a day if it wants to. But we'll see if you can get up there. Could you get higher? I don't think you're getting higher than this 618 fan. And so far, again, negative momentum, right? That's the problem that you're going to have. You're still bearish on the money flow here in the weekly. You're still negative in participation on the volume. And if you go ahead and go to the daily time frame to really look at this as well, you're just above the median line here for the money flow, negative participation in the market, below average volume candles. Again, fewer participants paying higher prices. Here's your 200, 233. Left this fib the way it is because it lays out so beautifully. That's the 1618 at 12,638. 618 Fibonacci fan. If you did come up here, this could potentially be a dream trade, okay? Because if you did come up here in a low volume rally, if the low volume rally continues and you get up to 12,686, you get in this quadrant, the 618, the 200, 233. Excellent opportunity to short and then at least look for a retest back down here of the 50. So this would be an excellent trade. But we'll see how this plays out if in fact you do get the mojo to continue. Because right now you're about to approach, where are you about to approach? 11,859. Then you got 12,000, 12,200, 12,400. You got to step your way up here and you could be petering out here this week. Time will tell. Man, this went long again. All right, guys, hope you enjoyed the video. I'll answer all your comments as always. And yes, that is me that you are talking to in the comment section. Definitely check out our room, like and subscribe to the channel and this video. Appreciate your guys' support. Take care, everybody.